What if the reason most people struggle with money is not because they are lazy, unlucky, or unintelligent? What if the real problem is that no one ever taught them how money actually works? That is the central message of Robert T. Kiyosaki's Rich Dad, Poor Dad. The book begins with a simple contrast. Kiyosaki grew up with two father figures. His real father, whom he calls his poor dad, was highly educated, hardworking, and believed in the traditional path. Go to school, get good grades, find a secure job, and work your way up. His friend's father, whom he calls his rich dad, thought differently. He believed that school teaches people how to work for money, but rarely teaches them how to make money work for them. That difference shaped the entire book. The first lesson is also the most famous. The rich don't work for money. At first, this sounds strange. Of course, rich people work. Many of them work extremely hard. But Kiyosaki's point is not that rich people avoid effort. His point is that they do not build their entire life around trading time for a paycheck. Poor dad believed a good job was the answer. Rich dad believed financial intelligence was the answer. Most people get trapped in what the book calls the rat race. They earn money, spend money, take on bills, buy liabilities, and then need the next paycheck to keep everything going. As their income rises, their expenses often rise with it. From the outside, they may look successful. They may have a nicer car, a bigger house, or a better title. But if every dollar that comes in quickly goes back out, they are not financially free. They are simply running faster. Kiyosaki argues that fear keeps many people in this cycle. Fear of not having money pushes them to work. Desire for comfort and status pushes them to spend. Then fear returns because they need more money to maintain the lifestyle. Rich Dad wanted him to see the pattern clearly. Money is powerful, but if you do not understand it, money can control your emotions and decisions. You may think you are choosing freely, but fear and desire are quietly making choices for you. This is why the book is not only about investing. It is about mindset. Do you work only because you are afraid of not having enough? Do you spend because you want to feel successful? Do you think a higher salary will solve everything? Kiyosaki says the first step is to stop being controlled by money emotionally and start learning how money works. That leads to the second major lesson, financial literacy. It is not how much money you make. It is how much money you keep, how it moves, and whether it is building freedom or creating pressure. Without financial literacy, even a high income can disappear. With financial literacy, even small choices can begin to build a different future. The most important financial idea in Rich Dad, Poor Dad is the difference between assets and liabilities. Kiyosaki defines it simply. An asset puts money in your pocket. A liability takes money out of your pocket. This one idea changes the way you see money. Many people think they are becoming wealthy because they buy things that look successful. A bigger house, a new car, expensive clothes, a lifestyle that impresses other people. But if those things create more payments, more debt, more maintenance, and more pressure, they may actually be liabilities. The rich focus on building assets. The poor and middle class often focus on income, then use that income to buy liabilities they think are assets. This is why Kiyosaki says the rich get richer. Their assets produce income, and that income can be used to buy more assets. The pattern compounds. Meanwhile, many people earn more but also spend more. Their money flows through them instead of working for them. This leads to another lesson: mind your own business. Kiyosaki does not mean quit your job immediately. He means that your job is not the same as your business. Your profession may be what you do for income, but your real business is your asset column. For example, someone might work as an employee, but outside that job they can slowly build assets, investments, businesses, intellectual property, income-producing real estate, or other things that create cash flow. The goal is not to look rich. The goal is to build an asset base strong enough to give you choices. Another important idea in the original book is the power of corporations and tax rules. Kiyosaki argues that financially educated people learn the rules of money, taxes, accounting, markets, and legal structures. They do not simply complain that the system is unfair. They study how the system works. This does not mean everyone needs to become a tax expert overnight. It means financial intelligence includes more than earning money. It includes accounting, investing, understanding markets, and understanding the law. The fifth lesson is that the rich invent money. This does not mean they magically create money from nothing. It means they train themselves to see opportunities that others miss. Where one person sees risk, another person sees a deal to study. Where one person says, "I can't afford it," another asks, "How could this be structured?" Where one person waits for security, another builds skills, gathers information, and takes intelligent action. Kiyosaki emphasizes that in the real world, it is often not the smartest person who gets ahead, but the bold person who keeps learning. Financial intelligence turns uncertainty into possibility. The sixth lesson in Rich Dad, Poor Dad is to work to learn, not just to earn. Poor Dad valued job security. Rich Dad valued learning. Kiyosaki argues that many people specialize narrowly, earn a paycheck from one skill, and then become dependent on that single source of income. But building wealth often requires a broader set of skills: sales, communication, marketing, accounting, investing, leadership, and managing people. A job can be more than a paycheck. It can be a classroom. The question is not only, how much does this pay? The better question is, what will this teach me that can make me more valuable later? This is one of the most practical ideas in the book. If you want more options, build more skills. But even after people learn the basics, Kiyosaki says they face obstacles. The first is fear. Everyone is afraid of losing money. The difference is how people manage that fear. Some avoid all risk and never grow. Others learn, start small, and understand that mistakes are part of the process. The second is cynicism. Cynicism sounds smart, but it often keeps people stuck. It says, "That will never work," before even studying the opportunity. The third is laziness. Not always the obvious kind. Sometimes laziness hides behind busyness. People say they are too busy to learn, too busy to plan, too busy to build assets, while staying trapped in the same cycle. The fourth is bad habits. If you always pay everyone else first and never build your own financial base, you make wealth harder. This is why Kiyosaki emphasizes paying yourself first, treating your financial future as a priority, not an afterthought. The fifth is arrogance. Arrogance is when what you do not know becomes expensive. The cure is simple. When you do not understand something, learn. Near the end of the book, Kiyosaki gives practical starting points. Find a reason bigger than reality. Make daily choices that support financial education. Choose friends carefully. Master one formula, then learn another. Pay yourself first. Seek good advice. Use assets to buy luxuries instead of using debt to fake success. The biggest lesson of Rich Dad, Poor Dad is not that everyone should copy one exact investment strategy. The lesson is that financial freedom begins with financial education. Learn the language of money. Understand assets and liabilities. Watch your cash flow. Build skills. Study opportunities. Manage fear. Take action. If you want one idea to apply today, start by looking at your own life honestly. What brings money in? What takes money out? What are you buying that creates freedom? What are you buying that creates pressure? You do not need to become rich overnight. You need to start thinking differently. Because once you understand how money works, you stop being only a worker for money. You begin learning how money can work for you. If you enjoyed this summary, subscribe to One Book in 10 Minutes. We turn the world's most valuable books into clear, practical lessons you can use in real life. One book, 10 minutes. Better you.